We now have moved from an unknown known to a known known, and we had the outcome from the EU referendum, as everyone knows. We voted for an exit by over 1 million votes, and we were expecting this to be the last webinar, and just going over what the implications were if we were to remain, etc., and what the market move has been. However, because it turned into a possibility and we have decided to exit as a country from the EU, we will do a continuation of the webinars and see how this story unfolds and pans out. So let's just do a rough summary of what the implications have been.
Thus far.
The vote. Yep,
right.
Thus far.
Okay. Well, of course, we had the unexpected resignation of Prime Minister Cameron on Friday morning. He waited no time to sort of indicate that he couldn't obviously carry on in the scenario where he'd vehemently tried to encourage people to vote Remain, and of course they went the other way. We've got a country divided. We know that the Scottish are looking again at the possibility of an independence referendum. And of course, sterling, as we sort of warned about, it's been a big reaction in sterling. There's a huge downside risk for the economy here. Sterling, of course, has fallen sharply, fell to a 31-year low against the dollar, and has fallen to as low as 119 against the euro. So looking at the barometer, assessing the outlook now, there's still some downside risks, of course, towards that sort of 110 area in the weeks ahead. So I suppose now we really need to consider what are the sort of next steps ahead.
Yeah, the next steps. I mean, this is the period of uncertainty. We are waiting to see whether the exit is a good exit or a bad exit. So a good exit would imply that we continue with some form of trading agreement with the EU. A bad exit would be we're back to square one, and we need to start on the back foot with trading agreements with countries, and then we feel more isolated that way. So the implications for sterling is if we do, and there are some warm words coming from Europe at the same time, so if we do see some form of deal after we have invoked the Article 50 and given 2-year notice that our intention is to leave the EU, if some trade deals are done, then I think that will prove to be a positive for sterling, and sterling will start to make back some lost territory. If there is a long or elongated period of uncertainty, then I think overall that will put further downside pressure to sterling as we try to find our feet in the new world.
So looking ahead then, we're a little bit, for now I suppose, really in a bit of wait and see to kind of gauge what the attitude of the Europeans is as regards this exit. We need to obviously see who's going to be the next Prime Minister.
Yes.
Odds are on Boris Johnson, who of course spearheaded the Leave campaign.
Yes.
Then I suppose it'll be starting to look at some of the economic data that's coming through as to regards how that is starting to impact the economy. Whether or not the Bank of England might start to cut interest rates, which of course poses potential downside risks for sterling. So a number of factors that are going to be happening in the weeks ahead.
Absolutely. I mean, we're still therefore lying in uncertain times. Saying that, though, a weaker sterling is a fantastic opportunity for UK businesses to export. But our recommendation going out is still, be cautious. We've always suggested hedging in the lead up to this vote, but the environment, because it still remains uncertain and therefore volatile, our recommendation would be to continue to make sure that you're looking at your requirements and hedging.
Absolutely.
And what we're going to do is we will keep you in touch as things progress and as sterling moves in reaction to those things that are progressing.
Sounds good.